Yo, what's going on, guys? Friday is here. We got a couple days to relax. Thank God. I feel like I need a couple days off here. Maybe I'm in reading too much and checking all the boards and the tweets and the Reddits and all that. But boy, oh boy, most of it, this is not you. This is not towards most of us out there. But why in God's green earth do people freak out over $1 or $2 loss? Did they just buy this stock a couple of days ago? You guys, we're 9 months. We're well beyond 9 months of this thing shorted, synthetics, manipulated to the gills. We're in this play for a short squeeze and thousands of percents gains until the shorts start covering. The price doesn't matter. I've said it a million times. You've heard it a million times. It doesn't matter. If we're at $40, $30, whatever, the longer this continues, the more trouble these shorts are in. So you guys, if anybody is out there freaking out over, hey, we didn't go up, we touched on this earlier in the week. There's 140 something thousand calls in the money. They're not going to, monthly expiration, their whole game plan is to short this thing down and get those calls out of the money. There's no way, unless we had some massive run up real quick, that they're going to let all those calls go in the money. They're just not going to do it. It's part of the gig. It is what it is. Until they cover, we hold the damn line. We wait for a run, which is coming up very shortly, I would assume, based on all these cycle theories. If you haven't checked out any of Astro stuff, my gosh, it's mind-blowing. But I think we're due. This thing is wound up to the gill, so let's just hold the line. We got to keep an eye on the damn SPY. We got to keep an eye on this Evergrande situation. I got a couple more turds here towards the end of this, and then a video that I played probably 4 months ago. We'll touch on this, and pretty mind-blowing. This was from February, how close to exploding this whole thing was, and to where we're at today, simply 7 months later, right? So yeah, not a bad week. It is what it is. We're still, we're not at $5, $8, $9, $10, $11 anymore, boys and girls. We're at $44.20. When this thing explodes, remember, we ran $5, $8, $11 up to 70 something bucks, basically. $14 up to 70, whatever you want to call it. So we're good. Relax. Here is the close. Unusual Whales blasting this thing out here at the market close today. Red, red, and more red. That is fugly, folks. Fugly, fugly, fugly. Dark pool really quickly, 61%. Our moving average has gone down to 64%. Super low volume today, boys and girls. 43.4 million. 26.6 million of those were traded, yes, in the pool of darkness. Boys and girls, we got to keep an eye on this Evergrande situation. The SPY, everything's down. Gold, silver, blah, blah, blah. I think a lot of this has to do with this. I'm going to do a little bit more researching. There's a few articles that I found over on the Reddit boards that I have not read yet. I am not super familiar with this. I know it's a couple days old now. But if this fallout comes over to our way, which it will, it probably already has somewhat by looking at this ugliness right here. Let's keep a close eye. Keep a close eye. And on the SPY, too. We're dipping down. This thing's on a monstrous run. This thing looks like... What's that show? You ever see that show where they have the little guy that goes up the mountain and he got to get him to the top without him falling over the thing? What's that? The damn... Where you spin the wheel. Some of you guys, in the comments, tell me what I'm talking about there. You spin the damn wheel, guess the price of the thing. Price is Right, for crying out loud. They got that little mountain guy that goes up and goes up and goes up and goes up, and then he falls off the edge and you lose. I think that's where we're at with this damn SPY. This thing's going downhill. Then you take a look at everything else. Gold, silver, all the S&P, Dow, NASDAQ, the Russell 2000's up. Crude oil, gold, silver, red, red, red. We've seen it right here. What am I doing? Pull myself together. So yeah, you guys, ticky-tock. This here, you guys, this here was the Interactive Brokers Chairman, Thomas Peterffy. I played this 4 months ago, roughly. This was in February after the whole explosion. This is a very good listen. We're going to listen to about 2.5 minutes of this. A lot of this article, too. If you guys haven't listened to it, it's about 6 minutes. If just Google him or search him on YouTube, and there's a lot of talk about the hearing. He did not go to the hearing. A lot of talks on the PFOF, and then this little piece here. But just take a listen. This was resurfaced today. I seen Jackson Hunter tweet out a little clip of this here, but just take a listen and remember, this was 7 months ago, and just think about where we're at today compared to what he was talking about in January.
Let's just start with this simple question. How close we were to this system breaking, something failing? How close were we, Thomas?
We were frighteningly close on January 28th when we had 50 million registered shares. At the same time, we had 70 million shares short and 150 million shares short via short call options. So if the call options had been exercised, the shorts would have had to deliver 270 million shares while only 50 million shares existed. So as the rules are today...
And yes, if you have to rewind that, you did hear that correctly. Jesus Christ.
The long broker has to, if he can't get the shares, he has to go into the market and buy the shares at whatever the price is. So that could have pushed the price further up into the thousands. When that happens, obviously the shorts cannot pay up. So the brokers, they default on the brokers default on the clearinghouse, and the whole thing is a huge mess that's impossible to untangle. So there is a simple solution for this, the way I see it. Number one, we would have to get the short positions published once a day, because we currently have it only twice a month. And second, we would the SEC would have to require brokers to charge an additional 1% of margin for every 1% of short interest. And that would then raise the margins progressively so high that people would stop shorting stocks.
So margin requirements would have to increase as short interest increases. That seems to be the view from you, Thomas. I'm just wondering, from your perspective, overseeing a broker, is there anything you can do to protect your clients before the SEC or the regulator has to tell you to do it?
Of course we can. That's exactly what we did. We increased our margins. So
why does the regulator need to make that decision on your behalf, Thomas? I'm just speaking out loud with you, thinking out loud, trying to work through this process with you. Why do you need the regulator to make that step?
Well, so first of all, I do not know the short interest daily, and that would be important for me to be able to know how much to increase the margins by. So the regulators could require that the short interest be reported daily. That's very simple. Secondly, the regulators tell us the minimum margin we must charge, and we are free to charge more, and that's exactly what we did. But some brokers may not know how to deal with this. That's why I think it would be good if the SEC required all brokers to charge more on shorts.
Thomas, another issue that came up as well was the conflict of interest issue as well. And I know for you that you have a different model. You're not reliant on payment for order flow.
Okay, the rest of that is payment for order flow stuff. I'll pop that in there if you want to listen to it. We've heard payment for order flow for the last 8 months. I'm so sick of hearing about that crap. We already know all about the cheating thieveries. Right? Right. Okay, here we go. Oh, yeah. Suspicious trades were made before Goldman's $2.2 billion acquisition of GreenSky, option expert says. There's a little video in here. I'll pop that in if you want to listen to it. Long story short, on September 14th, a trader bought 8,000 options that would pay off the price of GreenSky rose above $10, according to the market participants. After news that Goldman deal hit the next day, the value of the contract skyrocketed. The trader made an outstanding 3,900% gain in a single day. You guys think something funny was going on there? Yeah, I think so. The day before Goldman announced 2.2 purchase from fintech leader GreenSky, someone placed an option trade immediately. Oh, down here, this is what I meant to look at or highlight. That means a $40,000 bet would have turned into about 1.6 million. Yeah. I tend to think somebody knew something, right? This has been floating around here too every day. Something new. I meant to pull up Unusual Whales tweeted the dollar amount was. It was a lot of money. Anyway, Federal Reserve officials, including Chairman Powell, own securities that the U.S. Central Bank has bought during the COVID-19 pandemic. Of course he did. Of frickin' course. Oh yeah, I'm going to share this here for your reading pleasure. I always like to share Frank's stuff. He's always putting out outstanding stuff. AMC continues to be the most shorted stock in the market. Posted today, Mr. Frank Nez. Down here, in case you were wondering, really quickly, here is your shorters of AMC right here. Simplex, Susquehanna, Citadel, 683 Anchorage Group 1, Wolverine, Bank of America, Millennium Management, and Picton Mahoney, whoever the hell those fine folks are. So yeah, you guys, that's it. Just a fun little quick video. If anyone out there has watched this and freaked out, don't freak out. Do not freak out. A couple bucks means absolutely zero. We're holding. Shorts haven't covered. We're good to go. Okay, guys. Love you. That's it. I'll try to dig up some more on this Evergrande if you guys have not either. Let me know what you think in the comments, because by the looks of it, this market is about to bust. Market goes bust, we go boom boom. Rocket fuel to the moon. All right, guys. Love you. Talk to you soon. Bye-bye.